estate risk. So contracts, leases, values, and so on and so on. Or specific types, well, inflation or...
Yeah, we're contracting, well, there's a combination of the two. That's sort of a compound question. What I presented here was specific issues, but we can easily build it out. Basically, it's an option, and it's exotic options. So you could take average rates, you could take binary payouts, basically whatever it is you want. So you have a risk profile that you want to offset. We create the option, and then we find somebody who wants to buy that option. Or you have an option that you want to purchase. We look for somebody who wants to offset. So it's not like an exchange traded option where this is a payout, this is it. We customize it. Yeah. Just like a lease. If you go to lease, if you fill out a lease, you can have a plain vanilla lease, but those are dangerous. You basically customize the lease and you put the terms that you want in. So we do the same thing. It's just that we have verifiable payout. So there's no mystery as what happens if the market goes up. Well, you know what happens if the market goes up. The only variable is your outlook. You think the market goes up, he thinks the market's going to go down, and one of you will be right.
Okay. Gentlemen, do you have any other comments you'd like to make before I ask the audience if there are any questions here? We have some ladies with microphones to take your questions. No? Everything is clear? Oh, there. Okay, thank you.
Reggie, you're an American. If you sniff, then I get a cold. You sniffed at the real estate market for just a few seconds now here in the Netherlands. Let's say I own a real estate portfolio, either retail or offices, and I'm in that business already. From what you can see coming ahead of us, would you say step out of it? Would you say focus more on quality? Would you say make sure that you get your interest rates leveled, fixed? What are your advices instead of us just making us scared?
Well, that's a very difficult question to answer because it's general. It really depends upon your position. If you're over-leveraged, if you don't have access to capital and credit, and you're Class C inventory, my suggestion would be to step out before you get run over. If you are cash rich and you have assets, very valuable assets, and you have the wherewithal to do vulture investing, if I was in that position, I would sit back and would wait for the storm to cause other actors to overreact. And when they overreact, then I'd step in on a cash flow basis. Or you could be somewhere in between. But I couldn't give macro advice like that. If I did give macro advice like that, you'd get what you pay for anyway. So, but I do see opportunity. Buy when the blood in the streets is what Warren Buffett said. It's a tad bit oversimplistic. I'd buy after the person who bought when blood in the seat starts bleeding. So I don't have no problem taking risks, but it has to be risk-adjusted risk. There has to be a measurable reward to quantify the risk, quantified by the risk that I take. So I would not step out first, and I would let others step out. Everybody who thought that there was a true recovery in the States have gotten their fingers chopped off. The commercial real estate has taken an upturn very recently. I believe that that upturn is not sustainable because that was after a lot of government blowing, and it's before rates started going up. That was my prediction in residential real estate, and it was very contrarian. And residential real estate, is on its way down. We've had a very, very, very strong bull run, a bubble. And to have 7, 8, 10 years of growth, and 2 or 3 years later, to have it come back again is highly unrealistic, even without the bubble pop. In my area, neck of the woods, you have 10-year real estate cycles. And that's what it is. So to have a 10-year real estate cycle exacerbated by a big bubble, and then to run in 2 years after the fact and expect to make a capital gain on a transaction is unrealistic.
Judy, maybe I have a suggestion. In my opinion, it's very important to stay close to the wall, to stay focused. So the micro level is very, very important. So the market can go up and still you can have a bleeder. And the market can go down and still you can have a good performance. So it's all about looking for quality and scarcity. And I think that's the game.
I agree.
Yeah. Okay. Any more questions or comments? Trying to look upstairs whether there's anyone. Just wait for the microphone, please.
Many of the observations are based on history, the recent crisis. If you take office, in how far one should take into account mobility and the attempts of the government not to travel to an office, and it will increase. And the same with offices, retail, where internet is taking a bigger part of the pie, and I think it will take more and more. Now, large parts of cities are occupied with fashion shops and things like that, and before it was the travel industry who suffered. You nearly see them anymore in shopping centers, and I think there will come a lot more. What's your opinion about that? And it has an effect. It's much more structural than the financial one. It's the market.
Sorry, may I ask who you're addressing the question to the panel? Okay, who would like to take this one? Jacques?
Well, I think that for a valuer, it's not the responsibility of a valuer to predict future values. A valuer is trying to make a good value of an expectation of the price you can make today, on the reference date of today. I think we are able to predict the future, but also all the investors are in the world. And the only question is, which expert is better than the other? And all those factors you mentioned are very important to target an investment value. So it's not a question for a valuer. A valuer is just trying to make a reflection of the current market. But it's a question for the advisors and for the investors. And it's very important what you told, but it's not for the valuers.
And not for financiers either.
Okay, any other questions? Yes, there's a gentleman at the back. Any others? That's it, okay.
Mark Fiddler from CB Richard Ellis. Maybe a question for Reggie. A lot of us in the real estate market are trying to get a feel of where the market is going to go to. And there's very little finance for deals available now. And there's a whole load of refinancing positions coming up in 2 or 3 years' time on some very, very large portfolios. And no obvious indication of where that money is going to come from. And the traditional lenders at the moment are very quiet. The Germans are being increasingly careful. So the question is, where is the finance going to come for those major refinancing positions in 2 or 3 years' time? And we're looking around Europe thinking, is it going to come from the States? Where's the money going to come from? Who's going to step in and take these problem portfolios over and deal with them? But looking at your story, it's pretty scary. It's not a big incentive for American banks and investors to come over to Europe, because I think looking at it from your perspective, correct me if I'm wrong, but there's not a very high opinion of the state of play here in Europe at the moment.
No, there isn't. To be quite frank, you're asking, your question is assuming that there will be a full rollover of the debt. I'll take a hypothetical where you have property owner A who is financed by property owner I and G. No, just joking. By financier I. His property values have went from 10 down to 7, but he was financed for 8. So when the debt rolls over, you're asking me, where is he going to get the $8 in financing? Well, there's a $1 gap shortfall, and that $1 shortfall is known by all. So when it's time to roll over, there's a loss to be taken. I think that there's a lot of pretending, honestly, in the markets that there is no loss to be taken, but there is a loss. If there wasn't a loss to be taken, you'd have more financing activity. And until that loss is taken, I think you're going to have a stagnation in financing activity. Once the loss is taken, you're going to have disruption in the markets. But following that, you're going to have smart investors who are going to come in on a cash flow basis, and they'll finance it. They'll even finance it in cash. There's always an investor who's willing to come in, but nobody wants to get their fingers chopped off, especially when it's obvious that there's a capital shortfall or negative equity in the situation. And I think there's a lot more negative equity in various situations, not only here, but many other areas that are just not being touted or admitted because a lot of regulators and governments are looking the other way as long as that particular situation is cash flow positive. Now, looking at it from a cash flow positive perspective, I call that the delay and pray methodology. But you could delay for so long. Once you delay to the expiration of the loan, it's time for cash to come up. And that's when somebody's going to take a loss. Now, who's going to take a loss is a big question. But I'm sure the banks are going to say, the investor's going to take a loss. The investors say, well, share the loss with me. But, you know, there's going to be a loss somewhere. If there wasn't going to be a loss, then you wouldn't have to ask the question, basically.
Okay. Leo, will you share the loss?
Talking about the loss, it's all about our leveraging, of course. If that stays fair, there won't be a loss. But your question, apart from capital gains or losses, I think greatest problem within 2 or 3 years, if no other financiers will enter the market, Holland, for example, there will be a problem. We can do only what we can do, together with, at this moment, FGH here in Holland. SNS problems are known. 1 or 2 German banks, and that's it. And I think that will create, within 2 or 3 years, a big problem.
And we're seeing some insurers moving into this area.
Insurance? No, I don't.
Insurers, well, Allianz and AXA have
Yeah,
said that it's
not enough, I guess.
okay. I think that's a different situation in the US, where they do have more insurers who are also acting as lenders.
They do. There are sources of capital, but they're not acting as sources of capital. The problem here is mirrored in the U.S. as well. You have average of 5, some 7-year CMBS, a lot of commercial-backed mortgage securities that we use to finance these, and also 5-year loans, whole loans. The regulators have given the wink that you don't have to call these loans non-performing as long as they're cash flow positive, they're cash flowing. So they've kicked the can down the road, but what they should have done was called it what it is, a partially, and in some cases fully unsecured loan when you're a second lien holder. That works up until it's time to roll the loan over again. When it's time to refinance the loan, then somebody has to pay the shortfall. So your question is an obvious question, it's a good question. My answer is, you know, split the loss up or someone takes the loss fully. The bank is on the hook for it because even if the bank tries to force the investor to take the loss, when they sell the property, if rates go up, they're going to sell into an even weaker market than before. So this is a quandary. If they would have called the loan in when they found that the collateral reduced and broke covenants, they would have taken less of a loss or potentially no loss as compared to kicking the can down the road, saying because it's cash flow positive, we'll let you stay in the property. Now the market has decreased further, or even if it increased, a spike in interest rates caused a decrease, and now you have a bigger loss than if you would have taken your medicine up front.
Okay, with this happy thought, Peter, would you like to take the stage? Unless there's somebody else who would like to ask a question. I don't see anyone raising their hands. Okay, Peter.
Yes, thank you. Well, ladies and gentlemen, we are coming to a conclusion, and it's a bit of a gloomy picture that the speakers today have presented to you. I'm not going to reiterate that. Maar het is wel de vraag, hoe reageren banken op dit beeld wat geschetst wordt? Banken in het algemeen en ING in het bijzonder. We hebben vandaag gesproken over waardes. Wat is de waarde? Wat is de waarde in deze tijd? En hoe bepaal je een waarde in deze tijd? Of misschien nog anders gezegd, wat is de waarde van een waarde in deze tijd? Wat bedoel ik ermee te zeggen? Op het moment dat je als bank nu actie onderneemt op basis van waarde, dat is een punt in de tijd die je meet, terwijl de wereld in een flux is, economische crisis, landen die omvallen, nou, we kennen het allemaal. Moet je daar nu dan zo hard op acteren? In plaats van delay and pray, zoals gezegd wordt. Is dat de aanpak? Of moet je als bank zeggen, ik ga naar een stroomgrootheid kijken. Ik ga naar die cashflows kijken. Tot het moment dat markten weer in een bepaalde stabiele fase zijn gekomen. Dat is tussen Skilla en Charybdis door, zoals ik het noem. Je kan daar niet te zacht in optreden. Maar je moet er ook voor waken dat je niet het proces overdadig als banken neerzet. Dus ING Real Estate Finance die stelt zich toch op het standpunt dat ook in deze tijden de onderliggende cashflows, want daar gaat het natuurlijk om. Wat is een waarde uiteindelijk? Dat is de huurpotentie van die specifieke locatie. Daar moet je als bank een uitspraak in durven te doen, een visie op te durven nemen. Niet alleen de huur vandaag, maar ook de huur in de nabije toekomst. En dan kan je gaan differentiëren. Dan kan je als bank in staat zijn om daar waar het moet gebeuren, daar waar die cashflows questionable worden, om dan wel te durven te acteren in plaats van delay and pray. Maar doe dat niet daar waar je als ondernemer, vastgoedondernemer en als bank een visie hebt die anders is over die cashflows. Ik denk dat dat is de interpretatie van ING Real Estate Finance. En wat betreft het onderwerp wat ook is besproken, financiering, liquiditeit. ING Real Estate Finance heeft de mogelijkheden, ook dit jaar, om wel goede assets wel degelijk te financieren. En ja, de liquiditeit wereldwijd en op Europees niveau, er zijn banken die zich als gewonde dieren in hun hol terugtrekken. Kijk naar de Duitse banken uit de Nederlandse markt weg. Dat maakt het zeker niet makkelijk om voor grote partijen als ING en toch ook Rabo, om die markt natuurlijk compleet te onderhouden. Toch doen we dat zo goed als mogelijk. En we hebben ook de ruimte om dit jaar ook te groeien. Maar dan wel met die gedifferentieerde blik. Wel in de opportunities waarin we geloven. We gaan afronden. Ik wil een woord van dank spreken aan de heren. Leo, mag ik jou hartelijk bedanken voor de simpele en effectieve en down-to-earth manier waarop jij de presentatie hebt neergezet. Jacques, met de vele wijze ervaring die jij hebt, vanuit investment values, vanuit market values, heb je in het begrip waardering denk ik heel goed hier neergezet. Dank daarvoor. Tom, jij ook dank voor een presentatie waarin ik opvallend vond de combinatie van het wetenschappelijke en goede onderbouwde in combinatie met filosofische hoogte. Dat mixte je heel interessant met elkaar. En niet alleen leuk, maar ik denk dat daar ook een zekere kern in zit. Je kan alles kwantitatief tot in de hoek redeneren, maar uiteindelijk gaat het ook om de ervaringen en de visie op onroerend goed. Reggie, I would like to thank you very much for your presentation. It was engaging, it was inspiring. It is a lot of information. It gives me a great deal of thinking. Thank you very much indeed for that.
You're very welcome.
Daarmee komen we aan het einde. Dames en heren, ik wil jullie graag bedanken voor jullie aanwezigheid en jullie uitnodigen voor de borrel. Dank.